Hey everyone, me Kevin here. In this video, I'm going to go through the truth about why I'm not buying stocks right now and my thoughts on inflation and how my thoughts have changed over time. Some folks, very few, who maybe aren't really clear on following nuance, think that I have flip-flopped in my opinions on inflation. And in this video, I want to provide that nuance and some graphical depictions of sort of what's going on in my mind as it relates to inflation and then potential stock strategies, which we'll talk about towards the end of the video. And I think the easiest way to do this, which we talked briefly about this morning in the course member live stream, which sort of spawned the idea of, we should make a broader video on this. We do things like this pretty regularly, which of course, there's an amazing coupon code link down below for you to join in those course member live streams. But anyway, I thought, you know what, why not make a broader video just sort of clearing the air about this. Let's get this out. So the easiest thing to really do is take just a blank sheet here, and what we've got is sort of this continuum, right? So we've got November of 2020 right here, Feb, March, July. Here's that September to October Kevin keeps talking about, and then November plus, right? And what we're going to do is we're going to kind of draw on here what I expected in terms of inflation, what has actually happened, what kind of projections we're looking at now, and how Delta can screw everything up. And it's worth seeing this graphically because graphically it helps us understand where the pain is in the market and potentially how it could change going forward, and maybe that could guide us in some of our investing decisions. So let's go ahead and draw this. So first, if you go back and watch my videos in November of 2020, what you'll find is that I expected inflation or the market's inflation expectations to really start going up in March of 2021. And this really sets our baseline. We knew this was going to happen because we were going to be hitting those year-over-year numbers comparing March of 2021 all the way back to March of 2020 itself, or April figures to April of 2020. And there was a big hole in inflationary readings, right? This is what the graph looks like. So when you compare back to the whole, obviously you have larger inflationary readings. So the expectation, which we knew this was coming, the expectation was that we were going to have this relatively low inflation, some sort of explosion in inflation here, and then we would begin to see a flattening, and then come September and October, we would see a sharper kind of inflection point to the downside, and then maybe this sort of leveling off. This is roughly what my expectation was for inflation. Now let's draw reality, which it's always good to do expectation versus reality, and then see the difference. So the first thing, because it also helps us learn for the future in terms of how our expectations might be modified for the future, and I think graphically this is the best way to do it. So what actually happened was we had this low inflation, but all of a sudden in February, we had a freak out about inflation. And so we really saw this inflation come in much sooner, or concerns about inflation come in much sooner than expected. And unfortunately, higher than expected for longer than expected. And so this is kind of where we are now. This is what we felt. And so this morning when we talked about this a bit in the course member live stream, I really called this extra increase right here inflation fat. Right? Like this extra inflation, these extra supply chain issues, the inflation that's larger than expected and longer than expected is really represented by this orange here. So you can see, like, trajectory-wise, it doesn't make sense when people say, oh, somebody's flip-flopping on their opinions on inflation. They're just modifications. Like a flip-flop would be like, you think inflation's high, and then the next day you think it's gonna be low, right? It doesn't make any sense at all. That's illogical. It's illogical when people say that. And unfortunately, it's just a small minority, folks. But it's important to realize that modifications and inflections in the market are things that we could study to try to understand how do we want to invest going forward. So what is the current sort of projection? So the current projection going forward is also slightly different, and that is that we do expect there to be an inflection point, but we've kind of softened how quickly we think that inflection point will happen and how low that inflation will go. So this dotted line here, I'm going to call the projected line, right? So we'll just say dotted line here is projected. And so what you can see is this really builds in not only more inflation here, but it also builds in more inflation here. We still have a downward inflection that we're expecting for inflation, but it's not as much of a downward inflection as we were hoping for. Which, one of the reasons I bought a lot of call options back in May was because I believed when we would see this substantial plummet here, like this sudden rotation down in inflation, that we would potentially see a euphoric rally in the stock market, because the stock market would go, whoa, we were not, whoa, we knew high inflation was here, but we were not expecting it to disappear that fast. But now, that potential of it just inflecting down quickly is softened by supply chain shortages that are continuing, and the potential for rents to go up and services to go up. Now, they didn't go up as much as expected in the last reading, but still, we're expecting inflation to be a longer run issue than expected. And so this is a change in expectations. Unfortunately, that means, in my opinion, there might be less of a rally when inflation does inflect downward. But now here's where things get fun. So the fun part here is when we try to include delta in this. Okay, so delta screws all of this up even more. So ironically, I mean, let's think for a moment what happened with COVID. With COVID, people spent less money, sales went down, which is funny because, or maybe not funny, but it's like that's what's kind of happening right now, right? Sales went down. So sales went down with COVID. Sales are going down now. We're seeing retail sales slow. We're seeing this inflection point in people spending less money compared to where they were spending more money because they were propped up by stimulus money, right? Which we don't have anymore. The odds of a fourth stimulus check are pretty elusive right now. Excuse me. But anyway, here's what Delta could do. Delta could come in here and create a pause in spending. While creating a pause in spending, we would expect supply chain shortages to actually worsen as China shuts down ports because they're freaking out about COVID or whatever, because that's what China does. That'll worsen our supply chain issues, which actually prolongs inflation in the long term. But in the short term, we actually potentially, I'm going to draw this as this potential delta dotted line here, we potentially actually suffer more deflation in the short term. But then when we come back out of delta, whenever that is, we have no idea when we'll come out of delta, but whenever we come out of delta, it's possible that we end up with higher inflation than we would have had it not been for delta. So this creates like this is why there's so much uncertainty in the freaking market right now. Because look, if we were going to follow the red line and inflation was going to plummet, and then in that case, we would stick with the basically the original idea, which was, okay, well, if inflation plummets, then the odds are we would see a rotation back to high value in tech, and people would be very excited about going back to high value in tech because they're looking for yield. Well, now with the current projected green line, we have more inflation for longer, so you have the market a little bit more mixed. The market's kind of like, I don't really know where to go. I don't really know where to go. Like, I don't really want to go into high yield or high tech yet, because what if all of a sudden we do have more inflation, right? Which we expect to have more inflation. So you kind of have this hesitancy in the market. Then you have Delta, which is putting a lid on top of recovery stocks, but also creating the fears that we could have temporary deflation, but then worse inflation as we come out of it, potentially leading the Fed to have to raise rates sooner, right? So you've got these really bizarre scenarios where right now the market just feels like there's no right answer right now. I mean, there's always buy and hodl. I mean, that's easy. That's sure. But if you're a buy and hodler, you might not even be watching this video. But if you're trying to find the strategy in the market, this is very complicated. Because if you get a temporary collapse in inflation because Delta all of a sudden is getting worse, well, then that changes. That's going to hurt recovery stocks. That potentially is going to lead people to flee to safety. But maybe it's not going to be Zoom and Peloton. Maybe it's going to be Moderna and Apple this time, which is kind of the trend that we've been seeing, is the safer, high cash plays or plays that directly benefit from these booster shots and potentially FDA approval, right? But again, recovery would get smashed during this time and we'd hit some new lows, which maybe would create a buy the dip opportunity for a higher inflation time of people spending money again after we get out of Delta. But we wouldn't necessarily have stimulus over here to help prop up those recovery plays. So, there's a big question there. Then, the other option would be is if delta's a non-issue. Well, if without delta being let's see here. Bullard, U.S. had an inflationary shock that is large and which the Fed needs to take into account in calibrating 2022 policy. Well, yeah. I mean, that's essentially this. Sorry, I just saw that alert come through. But anyway, so that's one scenario is delta pain. The other scenario is we just have higher inflation for longer. And we end up having this sideways trading market where we're just tentative. Like, okay, maybe delta's not that bad. Okay, maybe inflation's not that bad, but it's still elevated. Okay, maybe things just aren't that bad, but they're also not that great or that euphoric. Year-over-year comps potentially start coming in negative because we had such a great 2021. And so maybe that means the entire market just trades sideways or even just slightly bleeds down a little bit as the market tries to get back to a stable foundation. I made this analogy yesterday, which I think is very useful on our podcast, Millennial Money. And the analogy I made was, let's say you have a house, okay? So here's your house. See, here's your door and everything. Great. In real estate, you can build a house on a cut lot or a fill lot. Well, let's say your cut lot is bedrock right here, right? All this is bedrock, and this is sort of your foundation. And let this represent the true fundamental value of stocks that we're investing in right now. The question is, how high off the bedrock is our house of cards? Or how high are our stocks off the ground right now? In other words, how much quicksand are we sitting on? If this is all quicksand, then really this is just Fugazi printed money that's propping up stock valuations. And it's possible that the house actually has to trend down to bedrock before we can really inflect up again, right? Get back to a fundamental value and then let true earnings carry the properties up. This is why people are like, oh, Kevin, look, we dipped to here or we dipped to here. We should go buy it. And right now I'm just like, I'm not that confident that we've hit a bedrock yet. And when you combine that with this uncertainty of look, I mean, I can project these things out, right? I could project out, okay, if we have delta, do this. If we don't have delta, do this. That's fine. In both scenarios, I ultimately want to own the shares. So the ultimate answer is owning quantity of companies that we like and believe in the long term. That's the ultimate answer. And now it's just a matter of, well, can we time it to a better bottom? Or can we get in before a euphoric rally if inflation inflects downward strong? That's hard. We don't know. And so that's where the uncertainty is. And that's why I think we have this bizarro market right now and why everybody thinks the market is weird and why one day a stock like Palantir is down 10% and the next day it's up 7%. I don't know. But anyway, this bedrock analogy here, especially after a season of SPAC IPOs and IPOs, it's somewhat, in my opinion, something to pay attention to. It's easy for us to look at like Cheesecake stock and go, oh, but here, let's pull it up. Oh, but Kevin, Cheesecake stock, it's so much cheaper now than it was before. So you go to Cheesecake and you're like, yeah, it was $65. But what if this is all quicksand? What if the true value of Cheesecake stock is $35 and we actually still have room to go down, right? So that is the struggle of the market right now. And hopefully this adds some clarity as to why is Kevin not buying the dip? Why am I selling contracts more? Because here's another thing that happens. In both scenarios, and this is really important to know, in both scenarios, us going to bedrock in stocks and in either going through delta or having inflation inflect downwards, guess what happens in both scenarios? In both scenarios, IV goes down. This is known in options as an IV crush. Not crash, it's crush. And when IV or implied volatility goes down, options premiums tend to go down. There are a lot of things that go into options pricing. And that hurts bought call options or bought put options. And this is one of the reasons I've been selling calls and selling puts like crazy, because I capitalize on that implied volatility going down. I capitalize while the market tries to figure out what the heck is going on. I capitalize on that transition of IV plummeting. That's why I'm selling so many calls and selling so many puts right now. And while I wait for more answers. So hopefully this adds some clarity. I appreciate y'all. Thank you so much for being here and watching this. I know this was a little bit more of a nuanced video. Thank you so much for being here, and we'll see you next time. Bye.